to give you a little bit of an idea what some different thinking is. And I think this really is a time of change. And we're all going to have to hang on a little bit because I don't think everything's going to be quite as clear as we thought. Picked up this chart over the holidays that kind of surprised me. It's a 100-year commodity valuation. And it's showing right now that we're probably at some of the lows that we've been at many years before. And that actually is something that I think can be related back to the 60s. I mean, we touched it in 2000. And it's sort of interesting. Now, this chart was put together by Goldman and a number of others, and they're looking at it as commodities to Dow Jones ratio. And commodities are so undervalued that it isn't even funny. So let's take a look at maybe some of the things that are happening. This is a chart of GDP in US dollars and showing a number of countries down the right-hand side. The US is right up there with Canada and Australia in that area. I didn't put them on here. I wanted to focus just on what was going on here as far as the one that runs across the bottom, which is India. Because the title of the presentation is India the Next China? And when you start taking this data to heart and start seeing some trend lines, it might surprise you as to how things look. Let's just look at China and India together and remember back when the Chinese marketplace really took off. And let's just draw a line from where India is right now on over, and you'll see that it's about 2005, in that neighborhood, 2005, 2004. And let's not bicker over a year here and there, but when you look at what happened when China's GDP got to that height, that's when it almost went straight up. And looking at it that way, it starts to give us some idea as to why all of a sudden we've got a big tariff on lentils, peas, chickpeas, and other things. What's going on here? These guys are changing rapidly. Well, unbeknown to a lot of us, between 2005 and 2015, India's oil consumption grew by 4.9%, while the world only grew at 1%. India could very well be the biggest contributor to incremental oil demand or growth over the next few years. And it's led by strong economic growth. It could overtake China, and most of this global demand is very different. And this composition of the Indian growth is kind of unique due to 8 to 12% of the growth in liquefied natural gas and aviation turbine fuel. Petroleum, coke, and fuel oil, unlike gasoline and diesel, which are the key drivers in many other countries. So these guys, instead of going for cars and so on, they have spent a lot more time getting low-cost airlines. And when you start looking at the growth of oil consumption, it becomes pretty clear that this place is going to be moving and changing. Now, let's take a look at our Chinese guys. We've got all the discussions going on with Trump right now and everybody else on TPP and looking at the trade balance as to what's going on. Now, in these graphs, it's a fairly simple way of showing you what they're short of and what they're in excess of. And you can see the trade balance is way in the positive side. In other words, they're exporting way more than they import by tons. And look at the services. They're not really great in the services. So they're negative in the services. And it looks to me like this thing is very typical. They haven't gone the service route at all. Now, let's look at our friends from India. It's almost like we turned the charts upside down. They're short on imports, but they're long on services. This is a big part is the computer, the technology side, and the rest of it that they're really powering through. And a really good group of opportunities here. And I see, we're using them for a lot of things, unbeknown to us. When you pick up the phone for that 1-800 number, good chance it could be somewhere over near India. Their English is good and they're moving forward. So let's look at India's imports and exports. Their imports, they're importing about $235 billion a year, and they export about $142 billion. Now, I think what's more interesting than anything here is where it's coming from. The imports, a lot of them come out of UAE, and most of those are going to say are in the form of various petroleum products. I would bet that there's a little bit of pulse crop sneaking in there that way, rather than pay any tariffs on it. That just may be a way that they access it. And looking at what, the petroleum, the gold, silver, electronics, there's a lot of things that they're importing on this side. And one of the things that's not included on there is some of their demand for meat. I know. We're going to get to that in a minute, because that's a bit of an unusual one. And so what do we send to export to India? Well, 20% of the dried legumes. And when you get looking through where they're getting the other 80%, it's Australia and a lot of other places, but I think there's a fair bit of it sneaking in out of other countries that they're unaware of, which may very well be Canadian, because we're saying that we do 40% of our lentils goes there. So there's some interesting things there, and a mix of other products along there as well. So they are important, don't get me wrong. Now, let's go at this a little bit of a different way. This is how much meat people eat around the world on a per capita basis. This was based in 2015, and it's OECD numbers. And as you browse around on this chart, you'll see the US and Canada well over that 150 level. Brazil, Uruguay, everybody on the chart except India. India is about 7.2 pounds. It's, I think, if not the lowest on the whole chart. And I thought, well, that just made sense, because, they don't, they look up to the cow. The cow's a religious symbol, yada, yada, yada. And they work with it that way. Now, our friends in China, of course, they're just eating pork like crazy. And their demand for pork is going to grow. Their demand for poultry is going to grow. And their demand for beef is going to be a little more stable, but it's still growing at any rate. It looks very good. But India, the demand for grains has been extremely strong as any emerging market moves towards more protein. And we just talked about that S-curve tipping point, which it's respect to energy demand and per capita GDP. And all of those things start to accelerate protein and related meat consumption. And this meat consumption has huge agricultural impacts. Pound of beef, 5 to 10 pounds of grain. So, these are some surveys that reveal that the Indian population, 71% of India is non-vegetarian, while the 28.85% is vegetarian. Highest number of poultry and meat and fish eaters are in a number of provinces where 98% of the population is non-vegetarian. So there are a big area, when you look at the size of the population of this place, that are meat eaters. So it's projected to become one of the largest growth areas for consumption of chicken, beef, and mutton. And they see that there's a lot of people that are, there's 1.2 billion people. There's 330 million that are, it's more than the population of the U.S. that are vegetarian, but it obscures the fact that a lot of them are abandoning the vegetarian diet and desire for more meat. And it's like any other country we've seen, that as you get more money, your diets start to change, and a bigger portion of your economic pie goes to meat. And so this place is changing. So what do we see some of the opportunities? Well, I guess I would have to say the big one, and maybe instead of fighting the battle on the dairy front, we should just get rid of supply management on feathers. We're a vast country with lots of feed grains, not many people, and lots of poultry opportunities. I think there's an opportunity there. Feed grains and oil seeds are going to dominate. We missed the liquid natural gas opportunity and oil exports short term, but they're still going to be there once we change governments and get around to some people who see the world out of a clearer set of glasses. So the Chinese, well, they put $4 billion into BC and built a start of a terminal and had to walk away from it. Do you think they're happy? I don't think Sunny Way's got a warm welcome. And so this is a quote from the director of Canada China Energy. We are a country of complacency. Without pressure to compete with others, we tend to think we have all a high moral ground on gender, environment, and labor, while others are inferior to us. Well, there may be a few who feel that way, but it's time that we get cooking. So with that, in the words of Jack Welch, a former CEO of General Electric, unless an organization is changing on the inside as fast as the industry is changing on the outside, the end is in sight. So with that, again, a happy new year, new thinking, and it's time for more. Thanks.